Welcome to Second Take, the show that takes a look at the issues behind the news. The Industrial Development Corporation has reported a big loss for its 2026 financial year. Terence Creamer joins me to discuss this performance and the policy choices that could affect its outlook. Hi, Terence.
Hi, Chanel.
What was behind this big loss?
Yeah, it's over 4 billion rand loss, and that's after the company actually made a 2 billion plus profit. That's the sort of core business of the entity that lends to different different businesses in South Africa, and that's its sort of normal sort of bread and butter. But it has associates and subsidiaries, and one of those is Foscor. And we know Foscor traditionally has been a difficult entity or subsidiary for IDC, and then it went through a major turnaround and started to produce profits, and there was some relief that maybe the worst was over. But in the year that's just passed, we've had it had a few incidents. It had 2 fatalities. The operation stopped for a couple of weeks. Then there was some flooding at the mines, and that also interrupted activities. But the main thing was the Israel-US attack on Iran in late February, which led to the disruptions to shipping out of the Straits of Hormuz. And the plant down in Richards Bay that uses the phosphate rock to produce different products, but fertilizer products, needs inputs that come out of that region, ammonia and sulfur that it uses in its acid plant. And that was initially disrupted massively in terms of availability, and then the price has then tripled for those products. So the business that plant has been placed in care and maintenance. So obviously that was a major drag on the results and the outlook as well, because this plant is still not out of care and maintenance. And probably if it does restart, and it looks like they want to restart it for the planting season, which is in October, the commercial viability of that at these sort of prices for these inputs is going to put pressure on the results for the current financial year. So it's not got out of the system. I think next year we'll see a similar, well, maybe not as big, but a similar losses from Foscor that will affect IDC. Then the big shut of Mozal in Mozambique, the big aluminium smelter, that was also had a major implication because the IDC has a 32% interest in that smelter, and that's sort of filtered through into its results. So those were the 2 big items, and there were some other items. So that's really what underpinned this year's loss at the IDC.
Non-performing loans also still remain a problem.
Yes, and now that's really the company, the bread and butter of IDC, and they lend to different entities in industry, agriculture, property. They really have their fingers, or have business partners with fingers in many pies across the economy, in the productive sectors of the economy. These are the sectors that we're really wanting to stimulate and get going. But as we know, it's been a very, very difficult period for a lot of businesses in that, as well as they have upstream investments in mining. And really, this has been a perennial problem for the IDC. It's these non-performing loans were at, I think, one point close to 50%, and they've now fallen to 35%. It's still at 24 billion rand. This is a very high figure. And the CEO has indicated this is a burning platform for the entity, that they're having to focus on this. And they've identified their top 5 contributors to this non-performing loan book. And I think there's going to be a lot of attention paid to that over the next few months. But this is an issue that I suppose comes a little bit with the territory of a development finance institution, because they're there to take on a lot more risk. The issue is that they need to do this in a way that they remain commercially viable. And if the non-performing loans get out of control, as I think they were a few years ago, I think they're showing a downward trajectory, but they're still very, very high.
The IDC has approached Treasury for support in attracting more lenders.
So this was a big surprise because, Treasury is allergic to state-owned companies approaching it anymore. We've seen that they've had to bail out massively some entities, like, for instance, Eskom being the largest, but they've also extended guarantees to a number of entities such as Transnet to get them through their financial pinch points. Now, IDC is not saying that it's totally unsustainable, but they're saying given what government is wanting them to do to keep the productive sectors of the economy going, that are some of which are in deep distress, they feel they need a guarantee, an explicit guarantee that they can then use to approach lenders, especially lenders that look at this non-performing loan book and say, guys, this and your impairments are just too high. We can't touch you, but also other development finance institutions globally. And they want that explicit guarantee from Treasury, uh, um, and to help them access more lenders and more concessional finance, as they say, to do what government policy wants them to do. So they've sort of knocked on the door of the National Treasury. They've also knocked on the door of the Revenue Service to say, we see our fellow sister DFI at DBSA has got certain tax exemptions, and we would also like that, please. So there's these two big decisions. I mean, it comes as a big surprise because we can see Treasury really is not keen. They're allergic, in fact, to any more contingent liabilities, which is on the accounts. They've bent over backwards to try and find a credit guarantee vehicle now to support the rollout of grid infrastructure, which we know is in backlog. And they wanted that credit guarantee vehicle hasn't been formally launched, but it's all about making sure that this isn't guaranteed by the state, ultimately by the taxpayer, that it's a different type of insurance product that gives that guarantee to those investors rather than the national account. So the fact that the IDC is going for an explicit guarantee is one surprising, and it's going to be interesting to see what the reaction is.
It looks like industrial policy choices could also have a big impact on the IDC's future.
I think this is a big one because it's clear from the Industrial Development Strategy 2026 that the DTIC, which is the shareholder ministry, wants the IDC to play a more defensive role in preserving industrial capacity that's really under risk. And it's quite broad based. There's quite a few sectors. I mean, we saw some of the industrial policy interventions around electricity tariffs for the ferrochrome industry recently, and now the manganese industry. One company there has got a benefit on the electricity pricing, but there's a view that there's certain sectors, and I think the big ticket item is steel, is under existential pressure, and there's a potential for some of this capacity to be lost permanently. And I think it's very much linked actually to the appeal for this explicit guarantee that they want from the National Treasury. They say, you want us to be this defensive backstop. But you can see when we've taken on these additional risks, look at our non-performing loan, look at our impairment levels. They are serious from our sustainability perspective. So you're wanting us to do more in the economy. And Minister Parks Tau was at their results presentation this week, and he didn't hold back. He basically said IDC is going to have to follow the Industrial Development Strategy 2026. And once we finalise the Steel Master Plan, we expect them to align themselves to that. And what that could mean is a major commercial transaction around ArcelorMittal South Africa. We know it's trading under a cautionary. That cautionary is all about its discussions with the IDC. Traditionally, IDC, because it's burnt itself badly in the past, has always wanted to take a minority position in such entities, and then to go in with a strategic equity partner that knows that business and that is able to turn it around. Where it hasn't done that in the past, it's really had difficulties, or it's had to take on majority shareholding, as in the case of Foscor, which, as you can see, that's become a weight. So there seems to be this push. We need you to play this defensive role in the economy. The pushback, we need an explicit guarantee. And then the wave that's coming around, like you're going to have to play a role that we want you to do to defend these productive sectors that are not only important geopolitically now to protect the steel industry, but are also important for certain downstream sectors that rely on the domestic availability of certain steel grades, and that must be sustained. So we're in a new era. That era has sort of been building over a number of iterations, but it seems now it's becoming quite a lot more serious and has serious implications for the IDC.
Thank you. That's the second tech show for this week. Thank you for watching and join us again next time for more news analysis.